Greetings, members one and all of the Salivation Nation, with some news about the Chinese economy that we should be paying attention to, especially with regards to precious metal prices, and especially silver prices. Yes, this is some news about China's economy, and we've been hearing for a while that their economy has kind of been slowing down as of late. And of course, you have to wonder what if that is playing some effect in with regards to trade talks and leverage that the United States may have in that area. But nonetheless, they are one of the largest, the second largest economy in the world right now. And but it grew 6.6% in 2018, which is the lowest pace in 28 years, according to the CNBC article. Let's explore. China on Monday announced that its official economic growth came in at 6.6%, the slowest pace since 1990. That full-year figure matched expectations from analysis polled by Reuters, and the fourth quarterly GDP growth also matched expectations, coming in at 6.4% on year from 6.5% in the third quarter. So China on Monday announced that its official economic growth came in at 6.6%, and the announcement was highly anticipated by many around the world amid Beijing's outgoing trade dispute with the United States, its largest trading partner. Economists polled by Reuters had predicted full-year GDP to come in at that pace, which was down from a revised 6.8% in 2017. Fourth quarter GDP growth was 6.4%, matching expectations. That was a decline from 6.5% year-over-year growth in the third quarter of 2018. There were a few bright spots in Monday's batch of official Chinese economic data. Industrial output grew 5.7% in December from a year earlier, beating economists' expectations of 5.3% growth, outpacing November's 5.4% growth. Retail sales data rose 8.2% in December on year, in line with forecasts and up from November's 8.1% gain. What we're seeing in the fourth quarter is that while the economy is decelerating, we're actually still have some support from most of the quarters from the export front loading, said Helen Zhu, head of China equities at BlackRock, referring to exporters rushing to ship their goods out of China before new U.S. tariffs hit. And so, yeah, there's always these little things. And you think about these GDP numbers and how they relate, especially compared to ours, it seems like they're still higher than what we are doing here in the United States. Zhu told CNBC that even though she expected some support from Chinese consumption and tax cuts, growth in 2019 will decelerate this year compared with 2018. Although Beijing's official GDP figures are tracked as an indicator of the health of the world's second largest economy, many outside experts have long expressed skepticism about the veracity of China's reports. That's another thing too. Yeah, can we believe these data? The official GDP figures have been too stable in recent years to be a good guide to China's economic performance, said Julian Evans Pritchard, senior China economist at China Capital Economics, a research house. But for what it's worth, the headline breakdown suggests that private sector activity strengthened slightly last quarter, he added. Chinese Statistics Bureau Chief Ning Zieg told reporters on Monday that his country's trade dispute with the U.S. has affected the domestic economy, but the impact was manageable, Reuters reported. He said China's economy has shown a slowing but stabilizing trend in the last 2 months, and that it was driven overall by domestic demand. They certainly have a lot of people to meet that demand if they can keep their internal economy rolling. Even before increased trade tensions with the U.S., China was already trying to manage a slowdown in its economy. Beijing is trying to balance a crackdown on high debt levels while also maintaining economic growth. While reducing reliance on debt would benefit the economy in the long run, it is likely a means of far slower pace of growth than the country has seen in recent years. Nevertheless, the economic data from China are being closely watched by the signs of damage inflicted by the trade war with Washington. While official data indicated China's economy held up for much of last year, it now appears to be slowing. Production metrics and export orders are falling as the country's trade dispute with the U.S. drags on and other factors weigh on growth. And both sides have been trying to negotiate a deal. There's been some talk of positive developments, but we shall see. China has offered a 6-year boost in import going on its ongoing talks with the U.S. Officials familiar with the matter told CNBC. China pegged its proposal to buy more U.S. goods through 2024 to President Donald Trump's hopes of re-election in 2020, sources told CNBC. China's top trade negotiator, Vice Premier Liu He, will visit Washington, D.C. on January 30th for 2 days of talks with U.S. Trade Representative Robert Lighthizer. And acknowledging that China's development faces a more complicated and difficult external environment in 2019, the country's Statistics Bureau Chief Ning said that there is an ample ability to institute new support. Analysts are expecting Beijing to roll out further stimulus in the month ahead. Tai Wang, UBS Investment Bank's Asia Economics Head and Chief China economist, said she expected Beijing to roll out further cuts to reserve requirements ratio, the amount of cash that banks have to hold as reserves. Together with other policy tweaks such as tax cuts and infrastructure spending, China's growth can be stabilized as the economy achieves a soft landing. So, this sort of a mixed message in this article and about Chinese growth or lack thereof, or slow growth. And a lot of that can be attributed, in my view, to, a lot of their internal economy, and obviously this trade war that's going on is having an effect as well. But regardless, if they were already headed for a downtrend, who knows? As you know, there's a lot of infrastructure, especially a lot of these cities with building all these empty buildings and abandoned areas. It's quite interesting what's going on in China. And if you take all that into account, what will that mean for silver in the coming year? I believe silver, as needed for electronics, and especially with all of the electronics that are imported from China, it's going to have an effect on silver prices. And but it could be, they could go down or they could go up. Because as commodities are tied, and silver is just as much a commodity as it is a precious, as it is a hedge or as money. And Alan 30189 had made me aware of a video of a technical analysis channel called iGold Advisor that showed the correlation of precious metals and silver especially to commodities. And so when you take that into account as the commodity, there is that tie-in, because even gold is can be seen as a commodity with its many uses, but silver especially is seen as a commodity. And so his technical analysis in that video talks about how it's going to probably be trending down for 2019. And I don't disagree with that. However, as we see from this particular article here about Pan American 2018 silver production modestly below original guidance, we can see here that heading into 2019, that could give us a clue as to where silver is going to be with regards to its availability and to its price, possibly. Pan American Silver Corporation reported the 2018 silver production of 24.8 million ounces was modestly below the original guidance range provided in January 2018, of 25 million to 26.5 million ounces, primarily due to shortfalls at Dolores and San Vicente, partially offset by higher than forecast production at La Colorada and Muchacha, both of which set annual records. At Dolores, above average rainfalls during the third quarter hampered our ability to make up open.
How are you?
Yes, hello. We were just in the middle of a report here. What can I do for you?
Do you have your card with you?
Hello? The scammer hung up on me. Anyways, at Dolores, above-average rainfalls during the third quarter hampered the ability to make up open-pit tonnages following the security-related road closures in June, resulting in a shortage of tons placed on the heap. In addition, slower cement deliveries due to logistical challenges required lower solution application, reduced leach rates. At San Vicente, narrow vein mechanization efforts required additional operator training, resulting in lower throughput and increased dilution. The 018 gold production of 178.9 thousand ounces was within the original guidance range. An annual record was set for gold production at Dolores. The 2019 guidance provided its initial guidance and excludes the assets to be acquired under the arrangement with Tahoe. The company said it intends to update the guidance to include the Tahoe assets and allocation of new general and administrative costs following close of the transaction, which is currently expected to be on or about February 26, 2019. For 2019, the company expects silver production to be in the range of 26.5 million ounces to 27.5 million ounces. Gold production, 162.5 thousand ounces, 172.5 thousand ounces. So, it's original below its original guidance, and how they predict. Some people are saying there's going to be less silver mined, and in the coming year, which will have will offset obviously the potential weaker economy. And if that's the case, the weaker economy, both in the United States or especially in China, depending on the mixed messages of the prior article here, really kind of gives you pause as to making a prediction for silver prices, especially silver prices. It's interesting. All these metals here, gold, silver, platinum, and palladium, are, in many cases in 2019, we should probably look at them more as commodities than money in terms of price adjustments. Given obviously they do have that hedge, they have that protection, but given their close tie to commodities and their use, and especially with how people view them in the world of the finance world and economic world, those of us in this community, we understand them to be as money, as hedges, especially gold and silver, but especially gold. And so there is a chance and possibility that silver could especially go down in price, but it could also go up in price, given all the reasons that I just mentioned, and from both those articles. And the reason as such is because if there's less demand for silver, then typically the price would drop, and that's what that's kind of the clue we're getting from the news we're reading here. But at the same time, if there's a slowdown in production, then if there's less silver in the market to acquire to be used for those products, and there's less of it there in order to be used, and there may be just enough demand to outpace supply, which could cause the prices to go up or stabilize or stay kind of right where they're at. With silver, it's dropping a little bit as of the recording of this video. Gold's down a little bit. All the metals are down somewhat, except for platinum. And so that's a place where we're seeing this. We could see this fight through the whole year between supply and demand, and the economic situation around the world, especially in China, which is important to pay attention to China. And I'm sure as the year goes on, there will be some agreement or not with regards to trade. If there continue to be tariffs on Chinese products, then I feel that would actually hurt the U.S. economy as well as hurting their economy. In my view, taxes of any sort really aren't good for the long run, even if they're used as a bargaining chip, which I know that's how it's being viewed, and that's kind of the tool that Trump is using and his trade negotiators are using to bring China to the table with regards to what's seen as unfair trade policies and imbalances between the countries. Who's more resilient and how that outcome will last, we shall see. But in the interim, it's going to affect gold and silver prices, I believe. And of course, with the Fed and what their decisions are made through this possibility of not raising any more rates. There's now talk of maybe a one more rate increase, possibly for this year. I've heard two, and I've heard as before all of this really instabilities with the markets, that it could be up to 3 or 4 for this year. Well, if you include last December. But nonetheless, it's very difficult. The bottom line is it's really difficult to really predict where the price is going to go. I've always been the mind, especially since 2018, the beginning of 2018, that we're going to see the prices steadily move upward. And I was kind of that mind for 2019 as well. Not really wanting to make a prediction that it would be at a certain level. It's going to be $17 for silver by the end of the year or so forth. But I do feel like that it's probably going to go up a little bit. I believe those forces the forces for it to go up, especially if mining production goes down or if finding deposits, even as a byproduct of other metals, that there's a chance we could see silver rise a bit, but maybe only negligibly. In other words, not enough to really have that much of an effect for many of us in this community. Because if silver ends up finishing the year at $16 an ounce and it's $15.30 right now, is that much of a difference to really have an effect on what we do here? But the more important question is, especially for silver, especially for many of you in the community who do acquire silver as that hedge, as a way to protect yourself from from economic instability down the road. What if it continues to remain flat through the end of the year, through 2019? Many in this community are relatively year. They may have been paying attention for 2 or 3 years, and silver's been running flat for quite a long time during that time. How is that going to affect your outlook on silver, especially silver? Gold's slightly different animal there, but with silver, I'm curious to see what you think. What if the prices stay kind of where they're at, or possibly even go down? Some people are predicting to maybe go down. I don't think by much that they will drop a whole lot. But what if they stay flat through the whole year? Are you going to stay in there and stick with it? Or will there be a potential that you may just, drop out or possibly diversify some of your investments and put some money elsewhere? Post your thoughts below what you think. I think it is fascinating and interesting to see what's going on in China, especially in this mixed report, and to see whether economic growth will be and how that could potentially affect silver prices. Post your thoughts below. I'd like to extend a multitude of gratitude to y'all for watching and encourage you to please rate, comment, and subscribe.